Today's session is on life in Brodies' corporate team. We have 3 lawyers on the Zoom call. I'm David Lightbody. I am a partner in what we sometimes call the core corporate team. And about 15 years ago, I was sitting in a similar position to probably some people on this call. I joined Brodies as a trainee, qualified into the corporate team, and I've stayed here and been developed and supported in my career throughout, and it's been a good place to do that. So now we're looking to develop the next generation of trainees and lawyers, and these sessions are a part of that. So I'll come on to talk a bit about what I do, but I'm joined this morning by Karen Davidson, who's a partner in our corporate tax and incentives practice, and Paul McLaughlin, a partner in our funds and financial services team. And together we'll just give you a bit of an overview of what we all do. It's a short session with a lot to pack in, so it will be a flavour of what we do day to day, but I think more importantly why we chose the paths we did and stuck around doing it for so long, because it's something we actually quite enjoy doing. So firstly, just a short bit about corporate and commercial services at Brodies. Brodies is a firm of, Paul, Karen and I all sit within the corporate and commercial practice area. Brodies in total is a firm of about 750 people across Edinburgh, Glasgow, Aberdeen, Dingwall in the Highlands, and London. And we've got a presence in Brussels as well for some specific purposes. And of that number, about 130 of us sit in the corporate and commercial practice. Now that includes not just people running the corporate deals like myself, but it's all the sort of specialist commercial services that support that, support corporate deals as well as day-to-day business practice. So specialisms like employment law, pensions, IP, IT, contracts, tax, data protection, energy and infrastructure. And there's a huge amount of strength and depth across all of those areas. The number of people and the experts we have mean that as a corporate lawyer, it's a very comfortable place to sit. There's always somebody who's going to know how to deal with a particular point that comes up in a corporate deal. It means we've got a lot of people standing behind us, and as a corporate lawyer, that is a very good thing. We are a Scottish headquartered, but by no means limited by jurisdiction. We've been growing, we continue to grow, and that means looking beyond our borders. So that's either following clients who are doing interesting things overseas, or targeting international markets and looking for people who want to do business in Scotland and the rest of the UK. And certainly these days, from a corporate perspective, most of what we do will involve a non-Scottish element, almost all of it. And indeed, in much of it, will have no Scottish element at all. It's just a feature of the clients and the work that we're doing. And the graphic on the screen there shows where we've been most active in the last 6 or 12 months. So you can see we've covered quite a big part of the globe. So what do I do in core corporate? And we sometimes call it core corporate just because we are what you think of as a corporate lawyer. We are running transactions. And what it means in practical terms is that we are coordinating in our team what can be quite a sizable multidisciplinary team from across the firm. And together with that team, we deliver corporate transactions for clients. Now, what do I mean by corporate transactions? Well, that could be quite a wide definition, but our work generally falls into a few different categories. So mergers and acquisitions, it's buying and selling of businesses for clients. Investments, acting for investors or companies who are taking investment in order to do things like launch a new product or accelerate their business goals. Reorganizations, where clients are restructuring their corporate groups for various commercial purposes, and Karen or Paul might touch on that a bit later. Private equity, which is really a hybrid of M&A and investment work, but requires some quite specific expertise on the parts of the lawyers and the other advisors involved, and we're doing some really quite high-powered stuff on that side of things. And capital markets, which kind of centers around fundraising for PLCs, which are listed on the capital markets, and helping boards and companies deal with the extra layer of regulation that goes along with being a listed company. And aside from that, we just do the general advisory work. Most of the stuff that a board has to deal with that is to do with company law or just generally making a company work comes to us. All that stuff that comes up on a day-to-day basis. And it's because of that that as the corporate lawyer, we are sometimes best placed to develop that trusted business advisor relationship. We often end up being the go-to contact for firms at the firm for clients, because even if we can't do something ourselves, we've seen most of it before and we sort of speak the language and we know who to go to and how to get things done. So all of that will mean something in practical terms to some who might have had experience in a corporate seat or otherwise. It might mean less to others. So in a sort of minute and a half, a quick study on what we do in a little more detail. If we imagine a hypothetical client which has identified an opportunity to acquire a company, the company owns salmon farms along the Scottish West Coast. It's got shore-based rearing and processing facilities. It's got international customers. It's got a workforce. It's got all the facets of a business that you might expect, plus some extra ones that are specific to its sector as a salmon farmer. So we, the corporate lawyers, might be approached at the point that the client's agreed headline terms with the seller, and that would probably include a provisional purchase price. The price will almost always be subject to the buyer carrying out due diligence to test out the assumptions it's made about the target business. So it's made a valuation and decided what it's willing to pay, but that's based on some assumptions that it's made about what the business actually is and what it produces. And what do we do in that process? Well, we carry out the legal due diligence. Our job is to investigate the target company for the buyer and advise on material legal risks, which the buyer would effectively be acquiring if it purchases the target. And it is important. The output of due diligence allows the client to do a few things. It allows it, firstly, to validate those assumptions it's made in setting the price. It allows it to take comfort that it fully or more fully understands the nature of what it is that it's acquiring. And if there is any material issue that's thrown up by our due diligence process, then the client can seek to renegotiate the deal. You know, it might seek to reduce the price or have a retention or demand some other contractual protection from the seller to reflect the risk that it's taking on. So in this hypothetical deal, the job of the corporate lawyer would be to assemble and coordinate a team of specialist lawyers from across the firm. We would conduct a Q&A process with the target company and ultimately write a report for the purchaser. And that report really is fundamental to how the purchaser, with our help, goes on to negotiate the detailed terms of the transaction. And our sort of phase 2 of that transaction would be taking on the drafting and negotiation of the share purchase agreement, which would be the main transaction document. And again, we'd be coordinating specialists from across the firm to help with that. So in a diligence exercise for a deal like this, we'd be bringing in definitely a real estate lawyer, and we'd be looking for somebody with special expertise on the leasing of marine sites from the Crown Estate Scotland, and somebody who knows, who can work with our planning team on the pretty niche planning aspects of operating salmon farms in the middle of the sea. Would need somebody probably looking at the shipping aspects and the registrations or charter parties of the vessels that the target company uses. Would definitely have somebody casting an eye over the employment terms and the arrangements with employees. Commercial services would probably be looking at the contractual framework and the commercial contracts that underpin the value that's in that company. Health and safety is something that always comes up on this type of business. The accident log can be quite an interesting read, where people are doing dangerous work out in the ocean. So that would be a real deal specific team, and you can sort of see why it would be very different if we were acquiring a software company where it would be very tech and IP focused. with much less emphasis on things like real estate. Or a restaurant chain would be different again, or a wind farm would be different again. The makeup of that team would be very different. But the sort of the common denominator is the corporate team who acts as the hub and pulls all of that expertise together, directs what the investigations are that we're going to undertake, and ultimately reports to the client, being front and center. So why is it rewarding, and why do I just think it's a good job and that's kept me interested over all this time? I've tried to distill that into just a few points, but really the overarching theme is the variety, the odd things you learn about businesses just as a feature of doing all these different deals. So if you'd done that salmon deal, you probably come away with a pretty detailed knowledge of the life cycle of a farmed salmon, which you probably never thought you would have. We've done, I'm working at the moment on deals in the whiskey sector. We're looking at technology to harness the power of the tide to generate electricity and address global issues. We've done fundraising for clients who are producing COVID tests. There's a lot of stuff that feels quite exciting and topical, and you get a bit of an insight into how these people run businesses in very different sectors and in very different ways. Other points, basically, one of the big ones for me is not all of what we do is law. I would say we are commercial advisors, and our job first and foremost is to negotiate and execute a deal. And that's what the client asks of us. Yes, we advise on legal risk, and yes, we sort of navigate the law. But I'd say more than half of the job is just telling the client how to get the deal done. And we're the experts in that. We're front and center with the client, so we might have 10 or 15 or 20 people in the firm working on a particular deal, but it's the corporate team that pull it all together and deliver the end result. So that's how we often end up with that trusted business advisor status. We quite often have really strong relationships with clients, and we go on to do multiple deals with them. It's an area where soft skills are really important. Because a lot of what we do is coordination work and project management and quality control. So yes, you need to know the law, but the nature of it means that even from a really early stage in your career, you can be highly visible on a corporate deal, and that's with the client, but it's also internally with colleagues, because we're putting together and coordinating these deal teams. We kind of get to know a lot of people across the firm, and it means you can do meaningful work even at an early stage when you're continuing to develop your legal skills. And it also means, not having a huge amount of corporate experience doesn't count you out from pursuing a role and becoming a successful corporate lawyer. We need to know a little about a lot, and we need to know a lot about some things. But I say it's just that we get exposure to so many different facets of businesses and legal risk that we kind of have to develop reflexes and know when we have to go and seek input from somebody more specialized in a particular area. You get that helicopter view. We sometimes work hard, but it's always as part of a team, and everyone's kind of like-minded. So it never feels lonely, and we have our downtime as well. And then last thing I was going to say is our clients are human. And I think there's a sort of preconception that they might not be. The faceless corporation, though, does not exist. We deal with humans. We deal with personalities in the same way that a private client lawyer or an employment lawyer does. Often our clients are individuals who are undertaking life-changing transactions and might be doing it the only time they ever do it. So there's a real human story in what we do. And it's fulfilling that we're a big part of delivering that. So that is a kind of hurry through what I do in sort of run-of-the-mill corporate, and I quite like doing it. Paul's going to talk about how he helps clients with some quite specific types of work, and Karen will take over from here, I think, and speak about where tax gets involved. And tax actually is often a key driver of how we structure and deliver our corporate deals.
Thanks, David. So yeah, I was going to talk first of all about what exactly corporate tax and incentive lawyers get involved with, because you might have some preconceptions as to what that means, and I suspect many of you will think that it means sitting punching sums into a calculator and doing boring compliance returns. So it's absolutely not about that. So we get involved in a huge variety of different types of matters and different types of transactions. So David has kind of chatted you through some of the kind of corporate focused transactions, mergers and acquisitions, reorganizations, investments, and tax are a kind of key point in relation to all of those transactions, and we get involved in all of those. We also get involved in real estate transactions, so that might be real estate investment structuring or real estate development, stitching developments together, buying bits of land together and putting developments on those and ultimately selling them. And there is some quite complicated tax planning gets involved in some of those transactions. We have an input into Paul's team in relation to the setup and running of funds. So there's some kind of tax specific issues that crop up in that we get involved in. And we also have our own little line of corporate incentives. So that's typically employment related tax issues and trying to create share incentives for employees that kind of drive employees to be able to think like shareholders when they're carrying out their business. So there is a huge variety of different types of transactions. And for clients, there's always many different ways that they can actually achieve their commercial aim. So our job really is to try and navigate the tax consequences of each of the ways that they could get to their commercial aim and help them do that in the way that creates the least amount of tax. So David, if you just flick to the next slide, I use David's example of a transaction to try and tease out from that the sorts of areas that we would get involved in from a tax perspective. So in the salmon business acquisition, we would work with Scotfish to try and figure out at the heads of term stage, what's the most tax efficient way to structure that acquisition? Is it buying the shares in the salmon company, or would it be buying the individual assets? Now, clearly, it wouldn't just be tax considerations that would be involved there. So we'd need to understand what the commercial drivers were as well to see what sort of flexibility we have to kind of shift things around a bit from a structuring perspective. What should be the buying entity within the Scotfish group? Is there likely to be a future sale of this business? And if so, is it just going to be a part of the business or the whole group? And what will be the tax impact for the shareholders as a result of that sale? And might that influence how you go about doing this sort of acquisition and how you would structure that? As part of the transaction, we would get involved in the negotiation of the contract because there can often be significant historic tax liabilities not always known about. And so our job is to negotiate what happens if a large expected or unexpected tax liability from the past crops up, and how are we going to deal with the payment of that, and who's going to be involved with disputing that or arguing with the tax authorities whether it has arisen or not. So our job involves a bit of negotiation and drafting around that. We might work with the newly merged group to see whether it might qualify for any future tax incentives. So that might mean incentives for investors coming into the business as shareholders, or it might mean incentives for the business itself in new acquisitions, buying new equipment, buying real estate. And we would kind of discuss with the client whether these tax advantages are worth it, and might getting these incentives restrict the business in some way in the future. Are they cumbersome or expensive to achieve? And we'd guide our clients through the process of applying for some of those incentives. We might also discuss with the newly merged business whether it needs to be reorganized in some way after the acquisition or possibly in the future. So should there be separate divisions created within the group, and how can we achieve this with a tax efficient on a tax efficient basis? Are there parts of the business that the acquirer doesn't really want and need to be sold in the short term? And what's the best way of going about achieving that without significant tax costs? We'd look at how the profits of the business can be extracted by the shareholders. And because different shareholders, different types of shareholders, whether they're corporates themselves or individuals, resident in the UK or resident elsewhere, might all be taxed in different ways. And so there are going to be some tensions there as to how different shareholders might want to extract their profits. And we could look at the structuring around that. Will the company be looking for investment into real estate? Perhaps Scottish might want to be developing a new processing plant in the UK or elsewhere, and what are the tax costs of doing that? And we might also look at people-related tax issues as a result of this merger. So, for example, the new business might want to incentivise the employees that are coming in to try and encourage them to stay with the business long term and not decide to leave because of the new owners. And they might want to try and give them the same sorts of motivations for success as the shareholders have. So can we try and design and create a share incentive plan that involves employees becoming shareholders? And that can be done in tax efficient ways, in a way that can reassure the existing shareholders that these employees are just getting a slice of a much bigger pie rather than eating into the existing shareholders' slice of the pie. Or on the negative side, there might need to be a redundancy program because they might have too many employees in one particular area. And there can be tax implications in relation to the way you go about doing that as well. And we would look at those. You just flick to the next slide, David. So yeah, just to try and explain why I like corporate tax incentives and a little bit about my own background. So when I qualified, I actually was a general M&A lawyer. So I did the sorts of stuff that David's team do for about 3 years before I decided I wanted to get involved in tax, which was actually a really good grounding. But what appealed to me was the fact that it's such a massively diverse area. It's constantly changing. As I said before, we're not sitting doing calculations all day. We don't do the boring compliance work. But what we're doing is taking a really technical area, understanding it, keeping on top of it, and then putting it into a practical context, and then using our interpersonal skills and our relationships with our clients to try and guide our clients to give them a clear picture of what their options are around different things. The great thing about working in the tax team at Brodies is that we're acting for a huge variety of sizes of businesses, from startups right the way through to listed businesses, as David mentioned, across a huge spectrum of sectors. So it's actually a great opportunity for you to build your general business acumen. You really need to get to know the clients and what their businesses do in order to be able to give them meaningful advice about how they go about structuring some of these transactions. And I really enjoy that aspect of getting to know different types of businesses and really understanding them. And also, your advice can make a huge difference. So there can be huge sums at stake in relation to tax liabilities. And our job is to be able to kind of guide clients as to what the kind of tax exposure will be of different things and allow them to make sensible choices. It's not all about trying to reduce tax to zero. That's unrealistic. But our job is to try and mitigate the tax liabilities so that clients can achieve their goals and have more money to invest back into their businesses. And that can be absolutely transformative for businesses. So that's just a little bit about why I like it. And I think we're going to move on to Paul now to talk about funds.
Thank you, Karen. Very good. Okay, so the funds team at Brodies, I'll start off by dealing with the term funds. What does the term funds actually mean? It generally denotes the pooling of capital from a number of different sources into a bespoke vehicle, with a view to that vehicle investing in a particular asset or number of assets and generating a profit for participants. So funds will vary from each other by reference to a number of different things, number of different features. Some examples for you: the nature of the investors, whether they are individuals, financial institutions, large corporates, or otherwise. The asset classes invested in, whether that be real estate, shares and securities, renewable energy projects, or infrastructure-related assets. The type of fund vehicle used, for example, investment trusts, open-ended investment companies, and limited partnerships are commonly used as fund vehicles. The management structure involved, in other words, how we go about rewarding and remunerating the managers who generate the profits for those investors. Another key component is the liquidity of the investments made. In closed-ended funds, investments are in effect locked in over a specified investment period. In open-ended funds, investments can be withdrawn during the lifetime of the fund if particular conditions are met. Slide change, please, David. Thank you. Okay, so in terms of the work we do, so we carry out lots of work in the fund formation, capitalization, and restructuring spaces. We deal regularly with the creation of secondary markets in fund interests, by which we mean facilitating the sale and acquisition of interests in existing funds. And we carry out all the financial services and regulatory advice attached to this work. However, as with the majority of the private funds teams in Scotland, the rest of the UK and beyond, we don't restrict ourselves just to dealing with investment funds. We do a lot of work in the structuring and operation of management and advisory groups in the fund sector. We establish tailored special purpose vehicles and asset-backed funding structures with pension schemes. We deal with pre-acquisition structuring matters in advance of acquisitions of corporates across a range of sectors. We also deal with the establishment of entities to be included as components and structures used for indirect investment in real estate. We deal with group restructuring, often in establishing Scottish LPs or LLPs for inclusion in the corporate groups of listed companies. This is often aimed at facilitating viable acquisition structures for further expansion, or creating a more efficient management and operational structure for the whole group going forward. We deal with joint ventures of all types, whether contractual in nature or involving a legal entity. And the final example I have is we deal with bespoke private wealth management structuring for UK resident and overseas ultra high net worth individuals. So continuation of a theme here, in carrying out our day-to-day tasks, we work collaboratively with a range of colleagues across many practice areas such as core corporate and tax, real estate, personal and family, banking and finance, and projects. On the actual nature of our day-to-day work, we do work very closely with both US and Indigenous English firms in London and carrying out the jurisdictional counsel role in international matters as Scottish Counsel. It is worth emphasising, however, that we have significantly increased the volume, value and quality of work we do as lead counsel in holding the pen on drafting and negotiating the main documents and project managing international matters. In doing so, we work with clients, other lawyers and other professionals across a range of locations. Okay, I think we've just reached the conclusion of core corporate tax and funds right on the 10 o'clock mark, which is pretty good, but pretty lucky. So it's time for some questions if there are any. I shall just check the sidebar very quickly. Yeah, we have one for David on core corporate. I think you might have on this before. Is it an advantage having done a corporate seat if you want to do a corporate NQ job from the applicant's perspective?
I think it'd be hard to say it's not an advantage, but I would say it definitely does not exclude you not to have done that. What I think are the key sort of transferable skills that apply to a corporate role are, it's helpful if you've done some transactional work, and I did seats in real estate and other areas of the firm, which gave a lot of experience in that sort of thing. That's all about knowing how to run a deal, but just project management generally is such a huge part of it. You know, the black letter law for company law, in some ways there's lots of it, but it's all kind of written down, and you can look up the answer and you will learn the answers, and it's good if you've had 6 months or 8 months doing that as a trainee. But otherwise, as I was saying before, there is so much of the role that you can really get on with and shine in and gain profile with clients and colleagues alike as you develop those skills, that I don't think it definitely does not exclude somebody that has not got that specific experience. And when we talk about corporate, there's so many aspects to it, and we have people who will come into our team and you know, there's me who does the kind of run of the mill day-to-day M&A, but there's so many specialities to it that whatever you start off doing, you're going to find yourself going off and developing certain niches anyway. And that's just part of developing as a lawyer. So I wouldn't say it is not an advantage, but I would very much encourage people who are interested in it to speak to somebody who does it, speak to one of us. I mean, our contact details will be available at the end of this. I know any of the three of us would be happy to have a chat with anyone who was interested or wanted to just explore or have some more detail on what we've talked about today.
Absolutely. Okay, we have no further questions, so I think that's we've reached our conclusion. Thank you all for joining us this morning.
Thank you.
Thank you very much. Cheers. Bye.